I do think that ultimately we will see a world where there is no such thing as a like Bitcoin Treasury company, because everybody should own Bitcoin. Holding fiat currency, you're losing, 5 to 10% per year on inflation. If you're doing the responsible thing for shareholders, you have to then look at yourself in the mirror and say, well, what other assets can I hold on my balance sheet? And not putting at least a portion of your treasury in Bitcoin is becoming irresponsible as a corporate treasurer.
Welcome to the Bitcoin for Corporations show. My name is Pierre Rochard. I'm your host today. We're joined by Christian Lopez from Cohen and Company. Christian, welcome to the show. Excited to have you on. Cohen and Company has been a really key player in the corporate adoption of Bitcoin. So maybe we start out with kind of what your background is and what Cohen and Company does.
Yeah. Well, thanks guys for having us on. We're big fans of your show. And then, of course, big supporters of the Nakamoto BTC Inc. ecosystem. So happy to be here. Quick background on myself. Started my career in investment banking finance at UBS. Spent some time at a pension fund called GM Asset Management, which was the pension fund of General Motors. And then spent a few years at Guggenheim Investment Bank, focused on their fintech platform. Cohen and Company, our background, we started the firm really with the thesis around frontier technology. Our founders come from the bulge bracket world. So JP Morgan, Morgan Stanley, Wells Fargo, Bear Stearns, UBS. And so we wanted to bring that bulge bracket execution expertise with kind of a focus on the ability to be nimble and fast in terms of adoption of new technology, particularly around the adoption of covering new technologies. I've personally been a Bitcoiner since 2016, and so had been following the space for a while. And when I came over to help launch the digital asset practice at Cohen, I took the opportunity to really dig in, right? Like, because I'd been around the ecosystem, I've known that Wall Street had turned its back on crypto and Bitcoin in particular. You mentioned that word Bitcoin, and most of the street would say, like, that's for money laundering, that's for drugs, that's for whatever, really falling in line with Operation Choke Point 2.0. But I knew that there's real people building in the space and understood the revolutionary technology of Bitcoin. And the folks who are building, the entrepreneurs, developers, who are building in the space, they're smart people, real people that also saw that. And they need access to the capital markets and strategic advice, just like somebody building a factory or somebody starting a software company. So we dug our heels into the space, built out the digital asset coverage team since 21. It was a tough and cold winter. But, on the back of the election and some of a lot of the political support around Bitcoin and crypto, we've been fortunate enough to have a very successful practice. And I think one of the leading firms in crypto and capital markets.
So yeah, that's a really interesting background. And from your vantage point, we really went from people saying blockchain, not Bitcoin. I think that was a common saying in the institutional world, that they really wanted to focus on the underlying technology. And so now today, where would you say we are on the S curve of Bitcoin corporate adoption and institutional adoption on Wall Street? Is it still very early, or are we kind of reaching full adoption? I just saw today there was a Dogecoin treasury company that was announced, which seems like that's kind of the terminal point in adoption. Where would you say we are?
I think it really depends on where you look, in terms of like the corners of the crypto and capital markets world. If you look at where the big boys are playing, right, TradFi, I think they're accepting all of these other kind of different alt currencies, if you will. I'll be polite. Just for the record, I am pretty much a maxi, although there are other builders in the ecosystem that are building interesting projects. So we do help. But personally speaking, I think part of Operation Choke Point 2.0 was big banks being afraid of losing market share to potentially self-custody, banking. And then that's kind of what Bitcoin allows for. There's obviously way too much capital behind Bitcoin and crypto that it has permeated political interests. So that, it's like any new technology, like electricity. There were candle makers who were fighting hard. And when, I'm sure you've heard these analogies, right? When the automobile was created, there were horse and carriage, lobby fighting hard against the automobile. They bought enough time to start really buying their interests, meaning the big firms, the big institutions, banks, et cetera. And where they're focused on is stablecoins, right? The ability to, we're now entering an era where every single large entity that is financially focused and potentially not financially focused, that has their own distribution network for the ability for them to actually issue their own stablecoin, right? So it starts with JP Morgan, Bank of America, Wells Fargo, all these retail banks that have hundreds of thousands, millions potentially of users, of clients, where you can now have a tokenized deposit token, right? Then you also think about folks that have a large following, right? Like you can start thinking about how big influencers can create their own stablecoin with the infrastructure of somebody else. So I don't know. The first name that comes to mind is like Mr. Beast or Cristiano Ronaldo. They have hundreds of millions of users worldwide. That is a distribution arm for a bank. That is a distribution arm for financial services. And stablecoins are really where those guys are focused. Now you move a little further up the curve of adoption. You have guys issuing digital asset treasuries, like, for example, Dogecoin or Toncoin, which we did, or the BNB coin. Folks are taking advantage of the open political climate. I think, and it's totally fine. Like we live in a capitalist system where money kind of follows money. And as long as there's no like fraudulent activity going on, as long as like people aren't rugging retail in the open markets, I think it's fine for people to use the capitalist system that we created. And I think over time, that same capitalist system will find who is the most efficient and where that capital should go. And so if somebody's not generating value in their public company and not generating value for shareholders, whether it's a software company or a factory, or whether it's a digital asset treasury company, capital will speak. And if you're not doing a good job for your investors, that money will flow out of your ecosystem.
Yeah, that makes a lot of sense. And as you mentioned, so the regulatory environment has completely changed over the past, let's say, 12 months. Now that friction has abated, where do you see the points of friction for the adoption of Bitcoin in corporations in the institutional context?
It's still early in that sense. I think for corporate adoption, it's like, while Bitcoin is, what is now fifth largest asset globally. I think large companies, Fortune 500, folks on the NASDAQ, they still have their own businesses to run, and they're still run by boards and management teams who they know about Bitcoin obviously at this point, but they've always managed their business with cash treasury, right? Gold's been around for a long time. They don't hold gold on their balance sheet. That being said, I do think that ultimately we will see a world where there is no such thing as a like Bitcoin treasury company, because everybody should own Bitcoin, right? Whether you're an individual, man, woman, child, whether you're a government, some sort of sovereign wealth fund, or whether you're a public company, holding fiat currency, you're losing 5 to 10% per year on inflation. And even if, I think it's like 10% a year that Michael Saylor quotes, right, that you're losing on inflation. If you're holding treasuries, U.S. treasuries, and you're earning a 5% yield in the form of the coupon from the U.S. treasuries, but your money is being burned at a 10% rate, your real rate of return is negative 5%. And more treasurers are becoming aware of this and understanding this. And so if you're doing the responsible thing for shareholders, you have to then look at yourself in the mirror and say, well, what other assets can I hold on my balance sheet that are actually protecting cash, that are actually protecting shareholder value, and not putting at least a portion of your treasury in Bitcoin is becoming irresponsible as a corporate treasurer. So I don't know if it's in the next year, 3 years, 5 years, 20 years, but there will be a time where most public companies will at least hold a portion of their treasury in Bitcoin to preserve that capital that they've worked so hard to generate.
Yeah, so that's really where MicroStrategy started in 2020. Was looking at, okay, they had, I think, $500 million of cash on the balance sheet. They have free cash flow from operations. And I remember back then hearing Saylor on one of the many podcasts that he has recorded, expressing that he's very skeptical of leverage. And then at some point, they decided to do a convertible debt offering and to shift from zero leverage to intelligent leverage. Um, and and then also equity ATM, right? Where we're not just putting cash from operations, but we're also tapping the capital markets for more cash to buy more Bitcoin for that purpose. Um, do you think that every company in the world is going to take that path? Or are there going to be really pure play companies that do raise capital to buy Bitcoin, and then operating companies that just sweep operating cash flow into Bitcoin strategically?
Yeah, it's a great question, and I obviously wish I had a crystal ball to tell you that, but I do have like I do have at least a thought and a gut feeling about how this will develop. I don't think this is a personal thing, and it's not a Cohen representation either. But it's really difficult for every company that holds Bitcoin on the balance sheet that's not also generating some other value, that's not an operating company, to hold an mNAV that's like above, I don't know, a 1.3 or 1.5. And the reason for that is because as more and more companies put Bitcoin onto their balance sheet, investors have more and more options to invest into. And so that, there is a limit in terms of the type of capital that flows into the capital markets. The more options that investors have, the less focus there is on one particular vehicle. And if there's less focus on one particular vehicle, there might be less buying and selling in that particular vehicle, and therefore driving down volatility for that particular vehicle. I think you're starting to see some of that. And where I was going with that is that, like, ultimately everybody's going to have Bitcoin on the balance sheet. Only a handful of companies can really be Bitcoin treasuries. And I think you're starting, I mean, MicroStrategy is one. Like, no one's catching up to MSTR. I hope Naka tries really hard, obviously. And I know David will. There's probably a few winners there, right? And it's definitely, it's MicroStrategy. Maybe it's Nakamoto. Maybe it's Metaplanet. But ultimately, investors who want Bitcoin treasuries will just stick to the top 3 to 5. Okay. And then capital will flow elsewhere where there might be other value being generated. Like Apple's never, Apple might be able to buy billions of dollars worth of Bitcoin, which would be great, but they're going to continue being Apple, and they're going to continue making phones and making laptops. I don't see them taking out massive amounts of leverage to go buy Bitcoin. Like, they should maybe take, intelligent leverage out, reinvest in their business, reinvest in factories, make their operating, their operating business more efficient. And with any excess cash flow above and beyond the working capital needed to improve their business, they will maybe put it into Bitcoin. That's where I think the rest of the world is going, is that, because I also don't think that, lenders are going to always underwrite just buying Bitcoin. MicroStrategy has uniquely been able to create a tremendous amount of volatility. They've taken the volatility of Bitcoin, of spot Bitcoin, and amplified it through leverage in the equity capital markets. So they put this equity wrapper around Bitcoin, where big institutions that can actually lend against Bitcoin, but really they're not lending. These are zero coupon convertible notes. And I know that he's moved a little bit, further down the capital stack with these preferreds, but it started with this convertible notes, zero coupon bonds, but these guys are generating yield. right? And they're generating that yield through the volatility. I don't think every company, every public company is going to be able to do that just because as more capital gets dispersed amongst more vehicles, there's going to be less volatility per vehicle.
Yeah, that makes sense. And what do you say to those who argue that rather than having every company holding some Bitcoin, just give the cash back to investors, let investors buy the ETF if they want to, but management should not be speculating on a commodity like Bitcoin.
Is this specific to like the winners, like the micro strategies and the
It,
knockout, or is this specific to, I don't know, widget
yeah.
company B who's generating 100 million of cash flow? Because I think the
Well,
answers are slightly different.
yeah. So let's hear both answers, I guess.
Yeah. So for the few winners who are for the few winners for the Bitcoin treasury companies like the Nakas, like the MicroStrategies, I still think they'll be able to generate volatility because they are the clear winners. So they'll still be able to play in that game where they sell vol to the large institutions and therefore drive outsized returns for their equity investors through that leverage. So I think those guys, you still, tell their investor base like, hey, Bitcoin's going to 1 million and Bitcoin on exchanges is, dropping every single day. Although I know there are a few whales over the last 2 weeks that have put a pause to that for now. But there's this incessant buying. But ultimately, it's a scarce asset that as more and more institutions and individuals and sovereign wealth funds, et cetera, acquire, there's only one way for the price to go. And that's what we're waiting for the big guys. Now, that's my answer there. My answer for operating companies that want to preserve the capital that they've generated for their shareholders, that's a question of like treasury management. Like there's probably a world where you have both, right? Where you can issue dividends, you can buy Bitcoin to put on the balance sheet to protect that shareholder value. You could reinvest it into your business. And it happens today. Companies like, for example, Apple, like, they hold billions of dollars of cash. Can they issue dividends? Sure. And why don't, I think they've started to issue some dividends, right? I think that's the path that like other companies will take, especially ones generating a ton of cash. And then there's the ones in between, which I won't say names here, but folks who want to become Bitcoin, like large Bitcoin treasury holdings that don't necessarily have a super valuable underlying business. I don't think those survive over the long run unless they do something different, unless they acquire or start generating cash through another operating business, or somehow find a way to raise a ton of money to go buy Bitcoin. Those will shrink over time and will be probably gobbled up by the big guys. I see a world where if there's a Bitcoin treasury company that's trading at a discount to NAV, and MicroStrategy is trading at 1.5 times NAV, and there's no more Bitcoin in the open markets. A great way to acquire Bitcoin is to acquire the shares of that company, meaning an M&A transaction of Bitcoin treasuries in those markets. And that's an accretive transaction to MicroStrategy, right? There might be a world where they pay a small premium because they don't want to drive the price of Bitcoin too high if there's very little Bitcoin.
Yeah, that makes sense. Earlier you mentioned that strategy has moved into the world of preferreds, which are in other contexts not as well known. That there's not a huge preferreds market. You can't buy them on Robinhood, right? So it seems like a more niche market. From your vantage point, why did Saylor and strategy go in that direction of the capital stack rather than finding other ways to leverage up?
It's a good question. To be frank, I haven't studied the preferreds as much as I have the converts, but I have spent a little bit of time there, and I think that the simple answer is just offering a different part of the risk curve for investors. With the converts, they're technically due. They're technically debt that's due at the end of the maturity period, but he's going to refinance. But those are zero coupon. The preferreds, they are kind of a hybrid of equity and debt. But you can still go if you're like a large investor. you can actually still go hedge against that. And what that means is that they're still generating that yield, but because it's further up the risk profile for investors, I think these, for example, like the Strike and the others, they have like an implied like 8 or 10% yield if I recall correctly. So in one case, you have a lot of downside protection. This is on the converts, which are debt. You have downside protection, zero coupon, but you can still go generate yield through the volatility. On the preferreds, they're technically preferred, but if they mature and you're not converted into equity, you still get paid back. And so you still have that downside protection, but an implied 8% yield there. So now the company owes you 8% plus the additional yield that you can generate through volatility. So it's just really moving up the risk profile so that you can bring in different types of investors. And ultimately, Saylor's goal is to acquire as much Bitcoin as possible. So he's creating products that that are attractive to different investor classes, right? Convert guys, debt guys, preferred guys, and then of course the equity capital markets. At the right time, you could use the ATM.
And he's mentioned that he'll use the ATM to potentially to pay the dividends on the preferreds, leading some to accuse it of, for lack of a better word, being a Ponzi scheme, right? Of paying new investors or old investors with new investors. And yet, if we look at capital markets, this is very common to raise cash flow from, one type of financing activity to pay another financing activity. So do you think that the critics are kind of missing the point here?
I mean, I think the critics are folks who don't believe in Bitcoin for the most part. For the most part, I mean, you're absolutely right. Like these types of tools are used in the capital markets all the time, and there's just there's a lot of haters, if you will, in the Bitcoin world. So they focus their attention here, but this does exist elsewhere. At the end of the day, it just depends on what your view on Bitcoin is. And like, are you a short-term investor or you're a long-term investor? If you believe in Bitcoin and you're a long-term investor, then acquiring as much Bitcoin as you can today should be the number one goal, regardless of, what, obviously within the reasonable limits, but to acquire Bitcoin in whatever way possible through using your various capital structure tools available to you.
So one of the tools we've seen from the new Bitcoin Treasury companies that are either doing a SPAC or a reverse merger is this acronym PIPE, PIPE, private investment in public equity. Do you want to walk us through kind of what a PIPE is, since it's been so common across many different transactions? I'm not asking about any specific one, but just in general, why it's a strategic tool to acquire more Bitcoin.
Yeah. So, PIPE is exactly what you said. It's a private investment into a public entity. The way that it works is you go out and you talk to public market investors about the opportunity that you have at hand, and you raise capital on the back of that. Now, that's obviously, I simplified it there, but that tool is used broadly in the capital markets. It's been used for a really long time. And it's an effective tool if you have a very good opportunity that you want to take to public market investors that can do it in large sizes. And you also can do it, you also raise it so as to not move the price of the stock in a meaningful way, right? Instead of folks going out and buying in the open market and driving that price up, you wall cross investors, meaning you restrict them from trading the stock because you're obviously talking about future opportunities in your plans, which is considered potentially MNPI. So there's very specific rules and compliance that you have to take when you're talking to these public investors. You wall cross them, they come in, they learn about the opportunity, and then they decide whether to invest or not invest. And this PIPE it's effectively just equity capital, right? It's not a convert, it's not a preferred, it's pure common stock. And what that means is it's actually, the riskiest capital. But as long as the idea is good and these investors believe in your story and your narrative and your ability to execute, they will come in and invest. And so, folks like Nakamoto, folks that invested in Nakamoto, believed in David Bailey, believed in BTC, what you guys are doing, and obviously came in large size.
The other kind of part of it was the convertible note, right? In the case of Nakamoto, we've seen others uh, do a convertible note or not do one. What do you think the trade-offs are in terms of doing convertibles in depending on the different market conditions and the opportunity there?
Yeah. So, yeah, I mean, like the convertible notes, it's technically debt, and these things tend to have like 3 to 5 year maturities. So there's like a bet on where the price of Bitcoin is going to be, and implicitly where the price of your stock's going to be. These convertible notes have a conversion feature, hence convertible note, that you can. That's a kind of like a pricing tool that's negotiated between the issuer, meaning the company, and the investor or investors that are coming into the convertible notes. And there's various terms like, length of the maturity, so 3 to 5 years. There is conversion price, which is typically priced at some percentage above the price of the pipe deal of the equity that you're raising. In many cases, between 30 and 50%. There are other terms like original issue discount, which is effectively a fee that you pay the lender to come into your deal. That can range from 0 to 5%. The trade-offs are like, do you think you can generate enough cash flow to pay the coupon if there is a coupon? In many cases on these Bitcoin deals, the convertible notes do not have a coupon. And that's because these investors can go out and hedge the convertible note in the open market. There's a lot of info about this, but just briefly, like the way that you should think about convertible notes, it's downside. It's a note with equity upside and downside protection. So if let's say you lend $100 million in the convertible note and the stock doesn't perform, you're owed the $100 million at the end of the 3 or 5 years, right? But if the stock performs and it's above 30 or 50%, where it was originally priced, that means you can convert out. And as you convert out, that reduces the balance on the convertible note. Presumably, the idea or the kind of the risk that folks take is that those investors will be able to have converted out fully of their note within the 3 or 5 years that it was due.
So you mentioned the hedging, which typically would be that they're shorting the public equity, adding to sell pressure on the market, and then on the pipe, that also can add sell pressure as the initial investors realize the gains that they've had on the pipe. And both of these are in some ways competing against the company itself that might have an ATM. And so when we think about the mNAV and that mNAV is something that leads to the accretive issuance and the increasing the Bitcoin per share. How do you advise companies to kind of balance all these factors so that they end up with a transaction that creates value for all the participants?
So it's a great question, and it's a tough balancing act in terms of execution. And you're absolutely right. The convertible note buyers, they have that loan, that downside protection. They have effectively an embedded call option on the equity, and as the price increases, they don't have to convert out. What they do is they hedge out, but they don't always have to hedge using the same stock. You can, and I think some folks do, but there's a lot of there's a lot of other like products that you can hedge. So you can actually go hedge Bitcoin itself. You can go hedge using IBIT, or you can hedge with other Bitcoin treasuries. When it comes to the company itself, it's competing. Yes, like you want to take advantage of the highest mNAV to buy more Bitcoin so that it's accretive. I think it's all about having a relationship with your lender, right? Are you long-term? Are you not long-term? Balancing the amount that you issue on your ATM versus the convert investors, because you do want to have a good relationship with them. And if you kind of squeeze out all of the mNAV as the company and the convert investor doesn't necessarily get to generate any sort of that yield, it is challenging, right? And you want to create that good relationship. It's a tough balancing act here that management teams have to go through with their investors. But at the end of the day, it's absolutely worth it. right? If you believe in Bitcoin, going through the process of managing your investors and managing your treasury is important because you want to accumulate that Bitcoin. And folks came in to invest in your company because they believe in your story and they believe in, in Bitcoin itself as well.
And how do you think the development of all these financial products on top of Bitcoin have affected the spot Bitcoin market? That even if we look at MSTR, there's now options products on top of it, like MSTY, right? That are doing all of this options trading. It's one of the biggest options chains out there. Do you think it has dampened BTC volatility, or is it too remote from it to have any effect?
No, I think absolutely. It's all tied together. There's so many more. This goes kind of back to the earlier point on like the compression of mNAV across the various companies that have Bitcoin. When there's more options to invest in, there's less capital that goes into each one. And so if like Bitcoin has a down day, there might not be as many, and there's now, hundreds of Bitcoin treasury companies out there. The effect of like the downward pressure on price of each one of those individual companies may not be as large as it would have been had there only been one Bitcoin treasury company. And it's kind of the same thing, around Bitcoin. It's absolutely like the volatility of Bitcoin has absolutely gone down. I mean, there's data to show it. And I think you're going to see that volatility also come down over time as folks stop selling Bitcoin. Like more and more people realize that that you never sell your Bitcoin. And it is the best store value. It is, the apex predator, to steal Saylor's terms, in terms of tools for saving. And so I think a lot of people are now seeing down days as an opportunity to get back in. You know, you're going to see fewer and fewer whales that want to dump billions and billions of dollars of capital into the market, and that's going to get dispersed into pubcos that are buying Bitcoin, or ETFs that are buying Bitcoin, or other investment vehicles that are buying Bitcoin. And it's going to become a permanent capital tool that gets put into these permanent capital vehicles.
Yeah, that makes sense. To go back to mNAV, I've heard different theories on what causes mNAV to change over time. One view is just it's sentiment, right? It's just animal spirits. Others, it's driven by volatility. Or what do you think are the most important factors that really drive mNAV up and down over time?
I think the first thing is the macro environment. Like, I think some of this is priced in, but rate cuts, it's going to drive risk assets higher, whether it's equities, whether it's Bitcoin, gold. Some of it's being priced in. So macro is absolutely a factor. And then on the micro level, just like the treasury management, like if you're using your ATM because you have a higher mNAV, it's going to compress your mNAV. And then I think those are kind of the first ones out of the control of like individual companies, right? The macro piece. The micro piece, if like you're using different capital markets tools, is going to compress your own. But then, and this is, I guess, like a recurring theme in our conversation, the more and more options that people have, the less focus there is going to be on your stock. And so, maybe Bitcoin, like one perfect example, and no hate towards the miners. Like I covered Bitcoin mining for a really long time. And I think they were pioneers and trailblazers in the industry. I mean, I know you spent a bunch of time at a Bitcoin miner. When the ETFs came about, the correlation of the price movement of the Bitcoin miners to Bitcoin itself dropped dramatically. There was a research paper by a large bull bracket firm that I read, kind of in the, I think, early 25, after they did a case study on the R squared, the correlation of a Bitcoin miner to Bitcoin itself after the ETFs and before the ETFs. And before the ETFs, the correlation, I'm not going to say the name, but it was one of the top 3 largest publicly traded Bitcoin miners. The R squared for the price of Bitcoin and the price of that stock was like 98%. And 6 months after the ETFs were launched, that correlation dropped to like 44%. That is true across all the Bitcoin miners. And so you apply that, and I haven't done the statistics on it, but like you can just see it. that's the same thing that's happening for MicroStrategy and all the other, Bitcoin Treasury companies that are out there. Volatility's, starting to compress. The mNAVs are starting to compress, and a lot of that is just because of optionality.
I also have heard Sailor say on stage that his theory is that the Bitcoin halving caused investors to rotate out of miners and into MicroStrategy. And I thought that was an interesting, but they basically happened, pretty close to each other. The ETFs and the halving. So, but that makes a lot of sense. So. Now, going forward, the opportunity for mNAV expansion would be volatility due to Bitcoin having another bull market and, having another run up. There's lots of talk about Bitcoin's 4-year cycle, which if we kind of map that onto past cycles, seems like we would have a blow off top in December. But so far, people are bored by Bitcoin. And we've already seen Ethereum have a big run. You mentioned the rate cuts. So do you think that the 4-year cycles are going to continue, or were they really due to the outsized influence of the halvings in the past?
So it's a great question. I've thought about this a bunch, and the answer is I don't know. But I do think that capital does return to Bitcoin. And it also capital flows like water. Wherever there's kind of the biggest hole or biggest divot, that it flows kind of downhill. But think of this as kind of a reverse downhill. Capital follows yields, right? And wherever there's more yield, that's where the capital is going to flow. And so there's a current opportunity where, particularly in the crypto capital markets, there's other treasury strategies that are out there. And so capital is rotating into those other strategies. But ultimately, I think what happens to alts in past cycles is relative to Bitcoin, they will always depreciate, because most of these alts, they don't have a finite limit. And so they will be inflated away, just like fiat currency. And so Bitcoin is just like a slow but steady moving glacier, and over time capital will just kind of rotate around it, right? Think about like almost like a orbiting moon around this giant planet. The moon will go around up and down, but it'll always follow that giant glacier that's moving, because that's the type of gravity Bitcoin has. And it will always, as long as there's a fiat currency system, which I don't see that changing in the near future, Bitcoin will continue to appreciate. So I don't know if that answers your question specifically. I don't know. I obviously hope that there's a massive jump in Bitcoin, but I do know that over time it will appreciate and capital will follow that.
I think it's wise to not have a specific prediction. All of my specific predictions have been wrong, but the general trend I think is good to point out. And I know Cohen companies at the frontier of technology. Another draw for capital has been AI and HPC. And we've heard Sam Altman, I think, was saying that they're going to invest trillions of dollars into data centers. Do you think that Bitcoin and, let's say, NVIDIA are competing for the same sources of capital? Or is it just completely different investor audiences?
It's definitely not different investor audiences. There's a large Venn diagram, but there's for sure Bitcoin only investors or crypto only investors. There's for sure non-crypto only investors, the folks who focus on public equities. But this the center part of the Venn diagram, I know for a fact, has folks from both sides of the table, because they've participated in many of our deals. And I do see that Venn diagram growing, the center part of that Venn diagram growing even more so. The large institutional investors that are taking meetings for treasury deals is much larger than it was when we first did the Nakamoto deal. And there's some really impressive, on paper names that you would never have expected to look at these transactions. On top of that, there's also big funds that are focused only on public equities and on crypto capital markets. And they have, like, those funds themselves have LPs that are much more traditional that you would never expect to actually be investing in treasuries, but they are, right? And they're supportive of these transactions. So they're 100% folks on both sides of the aisle that are participating in these deals.
Do they ever turn the table and ask, does Cohen and company have a Bitcoin treasury?
They do. And Pierre and Spencer, I'm fighting hard internally here. We're taking the steps, I think, to think about that. But obviously, I'm a big Bitcoiner myself, and I've pushed hard. It's definitely on the table.
Yeah. So when we look at kind of the investor appetite today, you mentioned rate cuts. Do you think that what I see at the supermarket is that inflation is continuing, and so I don't really see a slowdown in inflation at the supermarket. I do see it on Zillow. I see price cuts everywhere on Zillow, and so it seems like the Fed has two different price paths that it's impossible to reconcile the two with their toolkit. So from a macro perspective, how do you think that's going to affect Bitcoin going forward, given kind of the political nature of and the bifurcation here?
I think what you have to look at is our debt balance and the price of our debt. It's just becoming unsustainable. No, I don't think you can. I mean, it's great. We're generating a lot of revenues from tariffs, but ultimately that probably trickles into pricing, which drives more inflation. I don't know if that's where it goes, but like in theory, that's what ends up happening. And I think the Fed's in a really tricky situation because inflation is absolutely continuing to be sticky. Regardless, I think the housing market's, I'm not a housing expert, but I think the housing market's kind of going through its own issues right now that are somewhat, obviously they're all interrelated, but it's somewhat a separate issue. That's what's going on in the housing market. But if you look at our national debt balance, it's completely unsustainable what we have to pay in interest payments. And the only way to actually make that work without increasing taxes a tremendous amount, or doubling or tripling, the tariffs, which I don't think happens, is to lower rates. You have to monetize the debt. To quote Linalda, nothing stops the strain. And so if you look at it from that lens, the rates are coming down. And I think the Fed's going to feel that pressure. I know they're fighting hard, but I think folks are already pricing in a bunch of rate cuts.
The other tailwind for Bitcoin that is on everyone's radar this week is Strategy's inclusion in the S&P 500, potentially, because of the FASB accounting changes that have happened. They've been able to recognize some gains, and that qualifies them to go into the S&P 500 if the committee approves them. Are you handicapping that, or is that a coin toss?
Yeah, I think it's a coin toss for me. I mean, I don't think anybody wants to get in the way of the administration, frankly, right? And I won't say like names, but like large like organizations. Think about the regulators. Think about the different exchanges, for example. There's obviously a very big push politically to adopt crypto into the everyday. And so do you want to get in the way of that force, right? Whether you're like the committee at the S&P or you're a regulator or whatever, you shouldn't, I personally speaking, you should let the capitalistic system evolve how it should on its own, laissez-faire, obviously protect for any sort of, fraudulent activity. Again, always go back. There should be protection of investors, but as long as you're, as a company, operating within the legal rails, those regulators should allow you to play in the capital markets, right? And use those tools available to you, just like anybody else. I don't think they should discriminate a company from qualifying and hitting every single qualification tool or metric and denying you just because you're a Bitcoin company. I think that should not be under the purview of these committees, but that's obviously a personal opinion.
Right. And so let's say hypothetically they do get included in the S&P 500. Do you think that that makes it even harder for any other treasury company to catch up to MSTR? That now there's a clear winner, or will it just a rising tide lifts all boats? That they're going to buy more Bitcoin, Bitcoin price is going to go up, everything's going to grow.
I think it's the latter for sure, but no one's catching up to MSCR unless there's some significant outside event that is unforeseen. You know, they're gonna stay in the lead for the foreseeable future.
And that as part of the S&P 500, now we're going to have every kind of model portfolio that is passively investing into equities, also passively investing indirectly into Bitcoin.
Yeah.
So, you know, at this point in the cycle, um, that's going to create a permanent bid for Bitcoin, which the ETFs didn't really do, in the sense that, you know, you can choose to include the ETF in your portfolio or not. But for the most part, the S&P 500 is on autopilot. So do you think we're going to enter into a new phase here of Bitcoin price adoption?
I think so. Yeah. I Short answer, absolutely. Like there's going to be that consistent bid as you mentioned, but like just to touch on your point on the ETFs, like we're that's going to happen. And like by the way, the ETFs are most successful ETFs, been adopted super fast. And I forget where we're at now, but like whatever, past what 50, 60, 70 billion dollars in AUM for just BlackRock's ETF. And that's like you got to remember, like most of the capital sits within, call it our parents or grandparents' assets. They're still owned by kind of the boomer generation. But that we're about to enter the greatest transfer of wealth in history over the next 2-3 decades, and millennials and Gen Z, et cetera, who are more likely to own Bitcoin, are going to rotate that capital into Bitcoin or Bitcoin related products. So that like consistent bid for Bitcoin, I think it's absolutely going to come. It's going to take a little bit more time. I know we're all living in a world of like today, I need it right now and instant gratification, but that's not Bitcoin. Bitcoin again is a slow moving glacier. It will get there. And that consistent bid from capital into like these passive products will absolutely be there. But back to your original point, like, will there be a consistent bid for MSTR and some of the other treasury companies? For sure, especially as they have to balance like Bitcoin and inclusion into the index.
I think when David was on the show, he mentioned that his hope was that there would be so many Bitcoin treasury companies in the S&P 500 that we crowd out all of the other operating companies. So I'm hoping he's right on that.
Well, again, I don't know when it's going to happen, but I think every company will, or most companies will own at least a portion of Bitcoin on the balance sheet, because it would be financially irresponsible not to, as like the CFO of the company, to not at least, put an asset that's been generating, 40, 50% AP, like annual returns, versus an asset that's yielding a negative 5% annual return when you account for inflation.
So that hurdle rate, and companies adopting it, I've heard people say that that's going to be a problem, because now companies are going to be accumulating Bitcoin instead of investing in producing goods and services, and that Bitcoin's going to attract so much capital from all the other parts of the economy that interest rates are going to go up. And do you think that that's kind of science fiction, or kind of a misguided concern of demonetizing assets that shouldn't have been monetized in the first place?
Yeah, I think it's probably over concern for what's actually happening. As long as there's like this laissez-faire capital markets, like it will settle in the right place. You ultimately need to generate some sort of cash flow to buy Bitcoin. Like you can't take leverage out forever, and there's going to be downturns in the market. So if you don't manage your capital well, or if you're over leveraged, you're going to be in a really tricky situation. And maybe you're going to have to, like, if you're over leveraged, you might have to sell some of your Bitcoin to pay back the debt. And like, the lenders will come for the capital when it's due. That's for sure. So maybe it goes to a place like maybe it goes to a place where some people are over leveraged and like, you start thinking like, I'm only going to be Bitcoin. I'm only going to buy Bitcoin and nothing else. But I don't think that survives over the long run. I think you do need to be generating some sort of cash flow eventually um, to be a sustainable business.
All right. I want to completely change the topic. We recently had the CEO of a custody company come on. I wanted to get your thoughts on what are some of the questions or what institutional investors are looking for in terms of what the Treasury company's custodian is going to be and what standards they need to meet. Because on social media, all the Bitcoiners they just want proof of reserves, but it seems like that's not in demand from the actual investors in the equity. What do they look for, and who are some of the custody providers that have really been able to capture a significant market share?
Yeah, and you say like investors is not a concern. You're talking about like the pipe investors that have come in.
Correct. Yes, at the institutional level, kind of the big capital allocators.
I think it's a little bit less relevant to them, like who it is, unless it's just like a known name. As long as you have a good brand and you have the right compliance in place and the right, I guess like registrations and licenses and like a proof of being able to do this, I think they're okay. Um, you don't necessarily want like some small, custody provider that's never done this before to come in and custody your Bitcoin. So I don't want to name like specific names because we have a lot of like good partners out there, but I would say, the large household names that we all know of, I think folks are comfortable.
And did the from a balance sheet perspective so far, MSTR Saylor, he's been really focused on Bitcoin and cold storage. Um, Others are saying, hey, you've got to put those Bitcoin to work. You got to go lend them out. How do you see kind of the balance sheet management on the asset side developing over the coming years?
Yeah. So I think I'm more in Sailor's camp where you put it in cold storage and then you have an underlying business that's generating cash flow to accumulate more Bitcoin that you can use to borrow right against those cash flows. I like that model. It's a little bit more risk averse. Um, on the other side, you have folks who maybe are more comfortable with taking risk, and as long as they're disclosing that to the public and to investors, that hey, we're going to go generate yield using esoteric strategies by lending out our Bitcoin or selling call options against the Bitcoin, then that's fine, right? As long as you're disclosing, go ahead, and investors can make their own decision. My perspective is I'd rather never be put in a position where the market might turn against me. And even if you think you're perfectly hedged or perfectly risk managed, something can happen. And that could potentially be very, very detrimental. From my perspective, I think I've worked too hard to put my Bitcoin at risk. I'd rather, continue working hard, generating cash flow, buying Bitcoin, taking out intelligent leverage at the right times if I think so. But yeah, I think it's just two different models, and investors have, it's good for the investor world. And now you have different options on like what type of risk profile you want to take with the Bitcoin treasuries.
Yeah, that makes a lot of sense. Before we wrap it up, Spencer, did you have any lingering questions you wanted to throw?
Yeah, I mean, I kind of want to bring it back to this question of valuation. Christian, you were talking about 20 to 30 years from now. What does the market look like as Bitcoin has demonetized other assets? And I think you could think about markets in terms of that zero-sum framing of Bitcoin versus other assets. But there's also this idea that economies are creating wealth and will be creating wealth into the future. And I try to think often about how is Bitcoin going to change capital allocation for technology investing? And my perspective on this is that Bitcoin will, given its lack of terminal inflation, potentially lower the discount rates that we use for future valuation. And so I wanted to get your opinion on this, Christian. What might this look like for how investors look at capital in the future under kind of a hyper-Bitcoinization scenario, depending on how you define that term, is how might this change how we allocate capital and create wealth in the future, like more at a holistic or macro view? I'm curious if you have any thoughts on that.
Yeah, a few. I think Bitcoin is going to, with very, very few exceptions, completely demonetize real estate. The real estate market, the real estate properties that will have some premium to their true utility will be, I don't know, some Manhattan real estate and some beachfront properties. But there's no reason that, and then this means no disrespect to any, I'm from Illinois, so I'll just say, Illinois. There's no reason some house in like the middle of Illinois should be worth $1 million at this point, right? Like that's just it's unnecessary, and it's obviously driven by folks seeking some store of value with their capital. So I mean, I forget what the total real estate market is, but obviously in the trillions and trillions of dollars. With regard to technology investing in particular, I mean, who knows what the future holds here for technology, but there's always going to be cycles and something new that comes into play. The biggest trend recently was AI. And before that, I think the biggest trend was the internet. And so then what's the next iteration of that? Your capital will flow there. And so I don't think that we're going to completely demonetize like equities, for example, because there's always going to be a new idea that's generated where there's going to be a new adoption cycle where everybody, like, people like you and me, businesses, companies, governments will adopt that new technology, and that capital will flow there. And then on the debt side, that's a tough one. Where I think you'll probably demonetize some of the debt. We're already doing that. Like Bitcoin, if you think about fiat and debt, they're kind of the same thing. And we're demonetizing fiat. We're demonetizing the debt markets.
Yeah, and I think on that note, I think stable coins are one of the things that I am thinking about often as far as how are we going to manage our debt loads over time, and how does that intersect with the Bitcoin market. So Tether, I think, is a very good example with their massive treasury holdings. At the same time, they're accumulating Bitcoin. So I guess curious if you just have any high-level thoughts on will stablecoins have a material impact on demand for our debt or not? I'm curious how you think about that.
I think so, 100%. I think it's I'm surprised that our governments didn't adopt it, particularly the U.S. didn't adopt it sooner. But it's like it's a perfect way to globalize our inflation. Because I mean, that's like being the world's reserve currency. What you can do is you're exporting your inflation to other countries, and that's why we've been able to, be in a pretty much consistent budget deficit for the last 40, 50 years. The tokenization of the dollar is a phenomenal way to continue that, that inflation, like export of our currency. And even though you're kind of exporting that inflation to other countries, it's still better for those countries than to hold their local, for the most part, than to hold their local currency.
Yeah, and I think the last question I have is on this kind of international front. You mentioned Metaplanet at the beginning of the conversation, and they've essentially been able to be this Bitcoin exposure proxy for Japanese markets. And, I haven't looked into this too much myself, but I don't believe there are really any competitors in that space. And so maybe you could share with us how you think about those types of opportunities where will that arbitrage close over time? How quickly do regulators move? And I think, as you mentioned, there maybe is a saturation of the U.S. equities market, but how can investors think about international capital markets? And maybe Metaplanet could be a case study for that.
So Japan had this like really interesting arbitrage opportunity with regards to taxes, where and I'm sure you guys know this, but just for the audience's edification, I think Bitcoin or crypto was taxed at like a 50% capital gains tax, and equities were taxed at like a 30% capital gains tax. So the Metaplanet team saw this opportunity and said, wait, there's an arbitrage here. If we wrap Bitcoin in an equity security, we can save 20% in taxes on capital gains. And then on top of that, the Japanese capital markets are very deep and active capital markets. So I thought, those are really the two reasons why Metaplanet was extremely successful. I think there's been some copycats in Japan. They're smaller, but they don't have, similar to to Strategy and what Sailor's done, Metaplanet's like far ahead in that market. And I don't think there's any catching up to them. Now there's other capital markets that also have these types of opportunities. Not each jurisdiction is different. So not everybody has this this tax arbitrage, but some jurisdictions have, you can't buy Bitcoin for whatever reason, but you can buy equities. And if the equities buy Bitcoin, then you buy the equity, and like you have that exposure. I think there were, the most recent one that I've seen be really successful, and I forget the name of the company, but there was a South Korean Bitcoin Treasury company that that did very, very well. So I think you'll see those pop up globally, and I know Nakamoto, for example, they want to be the Bitcoin treasuries of Bitcoin treasuries and seed a lot of those early adopters in the various markets. But again, yeah, like what you said, Spencer, there will be more copycats. There will be more options, and ultimately, as it's a theme that I talk about all the time, but ultimately, almost everybody will hold Bitcoin.
Yeah, thanks for sharing. Pierre, over you if you have any final remarks.
Well, I'd hand it over to Christian. Are there any questions that we should have asked that we did not, or did we cover everything today?
Oh man, I mean, we could talk about Bitcoin. I could talk about Bitcoin forever.
Yeah.
I love the topic, but no, I mean, I think this was great. I appreciate you guys asking some thoughtful questions. Very, very geared towards the capital markets, which is obviously where we spend a lot of time. So hopefully your listeners get some good value out of this.
Yeah, thanks for coming on, Christian. I really enjoyed our conversation. And yeah, we covered a lot of ground. Thank you, Spencer, as well. And thanks to our audience. If you enjoyed the conversation today, share it with your network and make sure to tune in for our next show.